higher than this.
A very important number, which is Eicher Motors, they've just come out with the quarterly performance. So we'll stay with those numbers. And my sense is that markets are not too very happy with these numbers. 255, no, that's not what you would expect from a company like Eicher Motors, where margin expansion has been solid and sales have been largely linear. Eicher Motors, Bosch, Page Industries, some of these haloed 4-5-digit stocks now have certainly, entered a zone of what could be called as time-wise plus price-wise correction. Now there you see immediate market reaction. There is no margin of error if companies are getting it wrong in this earnings season. Either it's this way or that way. And if there is a little bit of sense that, corporate profitability for the quarter gone by was by slightly subpar, the immediate reaction is just immediate. And there you go. Look at the sharpish cut in Eicher Motors. First it was Bosch. Now casualty number 2, that's Eicher Motors. Now frankly, Eicher Motors has been just one of those haloed stocks. Everyone loves to own it. Everyone is of the view that the Royal Enfield as a bike, as an experience, will continue to do well. Even though we've been talking about a proper slowdown in the two-wheeler market, Royal Enfield or Eicher Motors sales dispatch numbers have been very strong. They've expanded capacity. They're in the process of expanded capacity. Even on an expanded capacity, their sales have been quite extraordinary. But if 8,000 rupees stock becomes 20,000 rupees in less than 2 years, obviously, and if there's a result disappointment, the market reaction will be immediate. 16,000 or sub 17,000 now for Eicher Motors, 5% off. And the markets are reacting to numbers because numbers are not in line with what we were expecting. I want to go to Bosch and Eicher Motors. Look at the cut there. Look at the cut here. Sunil Subramaniam, CEO with Sundaram Mutual Fund, joined us. Sunil, we won't get into Eicher Motors and whether you own it or not, but I want to understand from you that do you think there is a serious concern in some of these haloed 4-digit and 5-digit stocks? The correction started a couple of days ago with Page, and now Eicher Motors has taken a knock of 1,000 rupees in a single day. So this entire mad rush in some of the quality stocks we saw, let's say for 2 or 3 years, is that gold rush over?
Not necessarily. You see, if you have to decompose the earnings, it's the more the global factors which are affecting and some company-specific factors. So I think overall, if you take away those global cyclicals, earnings have shown about 8 to 10% growth. So I wouldn't really agree with you that there is a super flight to quality and stuff like that.
So do you think what has worked in the past, which is quality, good companies, great return on capital, solid management, that theme is here to stay, or it's time now to chase some of the cyclicals and some of the beaten down names?
I think the approach is coming towards that because even within cyclicals there are good companies. The only reason there are others are suffering because they are high operating leverage and in a downturn they tend to get affected as in the commodity price cycle. So I think that the companies are still good. And I think we are approaching the period where we can start doing value buys now, maybe in the next quarter or so.
So in this current downturn, as a house, where are you allocating capital? Are you buying, more of the same, or there is a distinct shift in your portfolio orientation?
By and large, over the last 6-12 months, we've been focused on a few sectors which we felt are good ones, which are interest rate sensitives, automobiles, cement, core manufacturing machinery. Those are the ones we've been bullish on. Increasingly, however, over the next few quarters, we will look to allocate more towards economic sensitives like public sector banks. We believe that a lot of bad news is getting priced in and soon they will start reporting better numbers. So over the next 12 to 18 months, we think that PSU banks and sectors like these are somewhere we will slightly increase our allocations.
The interesting bit has been that domestic institutional investors, for the better part of this year, or I wouldn't say better part, actually for the entire year, they've been big buyers. And October is the only month where they have been slightly on the sell side. So given that market volatility is back and we are off from the recent highs, has that impacted retail sentiment? Has that impacted the retail SIP culture?
No, not at all. We are continuing to see strong growth in the SIP flows. See, the domestic investor, for 2 reasons, hasn't got impacted by the recent volatility. One is, I think, more than corporate India and the international people, the domestic investor has got a greater deal of faith in the Modi government and in the recovery of our country. That's one. The second is, as you mentioned, SIP flows. This time when the investors have re-entered the market, it's been through the SIP route. On SIP returns, if you see, these monthly volatilities actually help them get better returns because they buy more units. So there's no panic element in terms of the investors at this time. That's one of the reasons that domestic mutual funds have been big buyers in the market, because they're getting fresh flows from retail investors. That situation is not yet changing.
All right, Sunil, appreciate your time and glad you could join us. I'm going to go back to Eicher Motors and then we'll address one more management. And Eicher Motors, Yatin, has disappointed. And I think, this is one of those stocks which is so priced to perfection that a bit of an error. And the first reaction is slam the stock down.
Well, clearly, Nikun, that is the case. On an inline kind of a result, we have seen Eicher Motors plunge 5%. And that was the case with a lot of these quality names which investors believe could outperform what they plan to deliver. And for Amara Raja also, and the same holds for Eicher Motors, even a slight bit miss on the earnings front will lead to a big fall in share prices, given the fact that the valuations for all of these companies are quite stretched. In fact, if you look at Eicher Motors, we were expecting a EBITDA margin of close to 16.2%, and they have reported a margin figure of close to 16%. So their core Royal Enfield business has done well, but clearly the blip really coming in on the commercial vehicle side, wherein the margins have been slightly disappointing, and possibly the market's not reacting very well to that set of earnings. So, shortly to conclude, inline result, versus the street expectations, but clearly on the valuation front and on the build-up that we are seeing ahead of the result, that has led to this fall on Eicher Motors.
Right, Chetan, thanks a lot for that. And you can see Siddhartha Lal, I think, getting ready to address the press. I'm going to quickly get one result reaction from Nandakumar, VP Nandakumar, Managing Director and CEO with Manappuram Finance, and then we cut across to that Eicher Motors press briefing. Mr. Kumar, good afternoon. Thank you for joining us. What were the key highlights for the quarter gone by?
Yes. I couldn't hear you. Can you repeat the question?
Would you like to outline the key highlights for Manappuram Finance for the quarter gone by? Because as I noticed in your income statement, the net interest income has been flat.
Yeah, it is because we had a legacy portfolio, a long-term portfolio in the past. So a portion of that has come for auction. As this has come for auction, there was some marginal deficit in the interest receivable. So that has depressed our net interest margin. That is the reason for the second quarter, the profit has improved only marginally. But what we can say now, the legacy portfolio is completely washed away. So hereafter, we have moved to a short-term products also, which will definitely help us in de-risking our portfolio. Now, going forward, even with a depression in price by 5%, we may not be losing even the interest receivables also. So, coming quarters, we expect is the interest margins to improve, and so also ROA.
Right, Mr. Kumar, appreciate your time. Thank you for joining us. Siddhartha Lal is speaking on how things have moved for Eicher Motors for the quarter gone by. That's when we thought we could cut across to him. Siddhartha Lal clearly is not ready. I'll tell you what. Let me just very quickly bring our viewers up to speed with what is happening in the markets right now. And no, Mr. Lal is back. We can cut across.
Limited, which reflects the Royal Enfield performance, is as follows. We had our best ever quarterly total income from operations at over 1,300 crores, which is an increase of over 58% from 821 crores same quarter last year. This quarter we posted our best ever EBIT of 334 crores, which is a growth of nearly 74% over the same quarter last year, and it translates into our highest ever EBIT margin of 25.7%, which is certainly now also the standard in the entire automobile industry. So that's the highest ever operating profit of 25.7%, and which reflects the continued growth and profitable growth of Royal Enfield. Moving on to our business updates, In quarter 3 2015, we had a best ever quarter of sales as well for Royal Enfield. We sold 127,611 motorcycles. So that's 1,27,000 motorcycles, which is a 56% growth over the same quarter last year. Our order book continues to grow faster than our sales and is strong as well. We continue to take in more orders every month. In addition to that, today the board of Eicher Motors also accorded an in-principle approval for additional capacity creation at Royal Enfield at our new plant, which we bought recently in Vallam Vadagal in Tamil Nadu, which is in Greater Chennai area. This will take the combined capacity of Royal Enfield to 900,000 motorcycles or 9 lakh motorcycles by the year 2018. In India, Royal Enfield continues to increase its retail footprint. We will be available at 500 dealerships by the end of this year, the calendar year. All these stores will reflect our unified global retail identity. In the last quarter, Royal Enfield has taken some significant steps as a part of growth strategy and focused international thrust to expand our mid-size motorcycle segment globally. Towards this, we've announced our first direct distribution subsidiary outside of India, which is in North America in August this year. North America is a nodal market for Royal Enfield.
BHEL for the quarter gone by has reported a fat loss. Not that they were expected to operate something significant, given given that what is happening in the economy and the fact that some of the power utility machinery makers or power equipment companies are in a serious disarray. The investment cycle has not picked up. And clearly, if BHEL has reported a loss for the quarter gone by, that is also in reflection of the fact that commodity deflation has not really translated into better income for them or better margins for them. There is a PAT loss, and on a year-on-year basis, the PAT loss has widened. Now, if I take the clock back, the general assumption was that some of these companies in between quarters will make a comeback in this financial year, but that's really not the story. Sales, in fact, have only widened. Sales 5835 versus 5700. I mean, there is just no growth whatsoever. And Tarang, my limited point here is that even though nobody was expecting anything big or grand from BHEL, on diluted expectations also the performance is poor. Tarang? This is Nikunj from the studio. Is my voice reaching you?
Yeah, well, the top line is largely in line with our estimate, but the bottom line is a big miss, and again, the higher fixed cost is keeping the margins under pressure for the company.
Do you think BHEL will continue to report poor set of numbers, because BHEL's main business is making equipment for the power sector? And till the time there is excess capacity, excess power capacity in the country, a demand for BHEL products will not come back?
Well, very much. As you know that last quarter the company had reported a sharp increase in orders, but then the new orders were challenged in the court, and again that are being kept and that would again not be executed as that matter is in courts. Also, one order received for around 8 to 10,000 crores was again disqualified by a court proceedings in Madras. So that has led to the lowering of order book. The company has also many slow-moving orders in its book, which would keep the execution very much subdued over the next 2 years.
So what could be the out of jail card for BHEL?
Sorry?
Out of the jail card, I mean, what will take BHEL out of the problems which currently have hit them?
Well, we thought that the large order from the Telangana region was the trigger for the company in the near term, but now there is not much clarity on that. So once the company is able to receive such large orders, the company would be able to turn around. But till that time, I don't see the company reporting strong numbers going ahead.
All right, Tarang, appreciate your time and thank you for joining us. Let's take a quick break with the news that it's just been one of those, big A number of heavy days for Indian markets. We started the day with BOB, then we got SBI, PNB, Bosch, Eicher, and the earnings picture is split right in the middle. What I like about today's earnings setup is that SBI, which is a clear indicator of what is happening to the corporate sector, what is happening to the investment cycle, their numbers were not all that scary. Eicher Motor in line with estimates, but stock run-up has been so strong that sometimes the markets, they need a reason to sell into a stock like Eicher Motors. The management is expanding capacity in an environment where competition will intensify. That, I think, according to me, speaks volumes. BHEL, horrible is the word, disappointing is the word, poor is the word, howler is the word. These are poor set of numbers. If they have reported a loss at operating level, that just tells you that what kind of a serious mess for the moment the company is in. And you know, Darshan, horrible, poor, pathetic, disappointment, you can add one more word.
Hey, you pretty much